Hello, this is Miss Janet with JLS Success Central, and welcome to my channel. We provide up-to-date verifiable information that you can use to build your personal finances as well as your credit scores. And speaking of personal finances, yesterday I did a video on the $16,000 child independent tax credit for 2021. I went through that pretty quickly, and I guess this is a continuation of that, but I'm going to go more in depth because this is some really good information regarding this particular tax credit, and it'll blow your mind the things that are covered. So let's get started here. All right, I did this yesterday, but I'm just going to do an overview really quickly. The Child Independent Care Credit explained. Okay, the Child Independent Care Credit is designed for parents to claim expenses from child care throughout the year. For example, if you're working and paying for services such as daycare or a babysitter for your kids, these expenses can be claimed when you file your taxes each year. Okay, now, how much you can get from the expanded child care credit is changed for expenses accrued in 2021. For instance, the maximum amount you can claim for multiple children in previous years have been $6,000. Now it's $8,000. Under the new stimulus law from March 2020, you can now claim up to $16,000 in child care expenses for multiple children. Okay? Now, what I'm going to do is this is which expenses count towards the credit. I'm not going to read all this. As I always say, you conduct your own due diligence. I'm just highlighting certain things that I want to bring to your attention. The link for this site will be in my comments below, okay? Just like the previous video. All right? Okay, the law defines expenses based on child care providers, but there's some wiggle room that also accounts for expenses like transportation. The key is that any organization or person that provides care for your dependent is counted as a child care provider as long as you are paying them. Okay, so we're going to jump down here to see what qualifies, what doesn't. Daycare expenses, they qualify, but your spouse does not qualify as for daycare expenses. Before and after school programs, no, parents don't qualify. Day camp, nope, not your older kids, keeping the kids during the summer, nope. Transportation to and from care providers, babysitters paid under the table, nope. Babysitters, nannies, and housekeepers do qualify. Now look at this right here, very important. Parents who pay their babysitters cash under the table should know it's risky to claim the child care tax credit since the income may not be claimed or documented by the provider. Be very careful with that, okay? All right, how you'll claim the child independent care credit. This is something for you to study, okay? Now, I'm going to get down to income limits and eligibility rules. All right. To qualify for the Child Independent Care Tax Credit, a household's adjusted gross income, that's your AGI, needs to be less than $125,000. If your income exceeds that amount, your tax credits will phase out at 50%. For example, instead of receiving the full $8,000, you'll be eligible to get $4,000. The credit rate phases down again to 20% for those with an AGI, adjusted gross income, of $183,000 and remains 20% until the income reaches above $400,000. Now, the credit rate eventually completely phases out for families earning $438,000 or more. Okay? Now, with the original child care tax credits, the credit rates would phase down to 35% if the income exceeded $125,000 and 25% if the household's combined income exceeded $183,000. Now, qualifying rules. All right, very important. According to IRS, qualifying rules for dependents are fairly broad. Now, broad, that's a good thing. In order to qualify, dependents must be the age of 13, unable to care for themselves if 13 or older. For example, if you have a spouse or older dependent who is impaired and incapable of caring for themselves and has lived with you for more than half the year, you can claim that credit for them. Or they must be physically or mentally incapable of self-care, even if their income was $4,300 or more. And of course, they have to have a tax ID number such as a Social Security number. All right. This is where it really gets good. Okay? What separated or divorced parents should know about claiming the child care tax credit. Only the parent who has primary custody can claim the child tax credit. Well, we know that, okay? The rules are similar to those governing the child tax credit and shared custody. Now, if you're married, both parents need to work or be receiving unemployment benefits to be eligible for the credit. You see this? Both parents need to be working or be receiving unemployment benefits to be eligible for the credit. Also, this is the part I like. If you're in school, you can still get credit. Isn't that something? You know, you're furthering your education. You're positioning yourself to get a better job and provide more for your family. And our government is going to give you a tax break. You're going to get the same tax break that people who are working get. As long as you have children, you know, children need to eat. They need daycare. They need to be taken care of. It doesn't make a difference if you're in school or if you're working. This is awesome. This is so awesome. Hey, this is Miss Janet from JLS Success Central. If you like this type of content, press the like button and leave me a comment. And also share this video. Share the one from yesterday as well. And if you haven't checked it out, go back and check it out. It has the same kind of thumbnail, so you can't miss it. So, because we want to share this information. We want to make sure that families, that, you know, we all know families. We all know people with children. We have family members. Some single households, some single parents, and some with, you know, both parents. But we still need to share this because as long as there's children, they qualify for this. Children under the age of 13 or children who are older but are unable to care for themselves, are mentally or physically incapable of taking care of themselves. If you're in school, you qualify as long as you have children that meet this criteria. But you must be working. That's it. You must be working or on unemployment. Okay? Hey, again, this is Miss Janet with JLS Success Central. And if you haven't subscribed to my channel, please do so at this time. Well, I guess I'll see you in a couple of days. Grace and peace. Miss Janet out.